Live from New York, you're watching Market Movers, the opening bell. Well, on this Friday morning, Wall Street is mixed ahead of the market open. Fed Reserve Chair Kevin Warsh is set to speak at the Jackson Hole Economic Policy Symposium this morning at 10 a.m. Eastern. Now, there's plenty of anticipation as global inflation signals are flashing and as bond yields do remain elevated. Now, Treasury Secretary Scott Bessent has tried to calm the market by buying back long-term bonds, but those efforts are severely restricted by a massive federal deficit, now hovering near 6% of GDP. Meanwhile, Boston Fed President Susan Collins is warning that she could support an interest rate hike soon if inflation does not show sustained progress. And less than an hour away from Warsh's speech, he traditionally avoids giving clear forward guidance on rates. Still, what he says could either reassure nervous investors or there is a possibility that we see long-term borrowing costs moving on his commentary. Now, in terms of the latest earnings, focuses on Marvell tech shares. They are taking a breather and are lower in pre-market trade after posting a slight top and bottom line Q2 beat with record sales. Now, revenue in the data center portfolio grew 46% year over year and topped $2.1 billion for the first time. Now, management saying AI bookings do remain strong. The semiconductor company's Q3 guidance topping estimates, and for the fiscal year 28, Marvell does forecast $18 billion revenue on 60% growth in data center revenue, and shares dropping as Q3 gross margin outlook is slightly lower than Q2, and there are questions surrounding its chip deal with Google. On the economic data front, it is fairly quiet so far this morning. At 10 a.m. Eastern, the University of Michigan's Consumer Sentiment Survey for August will be coming out, and the BLS payrolls revision are also due out in an hour from now. Now, a mega deal in the fintech world is off the table. Advent and payment processor Stripe are reportedly dropping their bid to acquire PayPal, this according to Bloomberg. Now, the consortium had previously offered more than $50 billion for the company, and PayPal was an early pioneer in the digital payment space, but the company has struggled in recent years to modernize its tech as heavyweights such as Apple and Google continually chip away at its market share. Now, PayPal shares are down about 16% in pre-market trade. And a major legal victory for Anthropic. A federal judge in California has struck down the Pentagon's effort to blacklist the tech firm, ruling the move violated the company's First and Fifth Amendment rights. The Defense Department blacklisted the company in March, citing national security. The Pentagon has been ordered to reverse the ban immediately. And ahead of the market open on this Friday morning, let's take a quick look at U.S. stock futures. Right now, we are looking at Dow futures advancing a little over 100 points, but NASDAQ futures are pulling back about 0.1%. As for futures on the S&P 500, we are looking at a slight bump higher of about 0.1%. As for the 10-year yield on this Friday morning, ahead of Kevin Warsh's speech, in less than 60 minutes time, we are looking at the 10-year currently slightly above the flat line, hovering right around the 4.678% level. As for crypto majors this morning, let's start out with a look at the Bitcoin chart. Right now, we are looking at Bitcoin pulling back nearly 1% on the session, but still holding above the 79,480 level. As for ETH this morning, we are looking at ETH right now hovering right around the 2,500 level. As for commodities, gold is nearly flat. Starting out with a look at the spot gold chart this morning, we are looking at it nearly flat and right below 4,600. As for oil, we are looking at WTI as well as Brent lower on the session. Right now, the front month contract for crude oil is down a little over 1%, holding right around $82.50 a barrel. As for Brent futures on this Friday morning, we are looking at Brent currently hovering right around $89 a barrel. And now let's go out to Chicago to see how Friday trade is setting up. Now, SIBO floor traders are anticipating Fed Chair Kevin Warsh's press conference, actually his symposium from Jackson Hole, Wyoming. Now, that speech is slated to take place in about an hour from now. So let's welcome Errol Coleman, who's live from the floor in Chicago. Hi, Errol. Good morning and happy Friday. So we are all anticipating Kevin Warsh's comments. So break down the pre-market action that you're watching.
No, thanks, Remy. Yeah, over the last couple of weeks, we've seen a lot of lack of volatility, and given the range-bound market we've seen over the last 24 hours, I think traders are looking for a little bit more clarity more than anything else from Kevin. And he probably isn't going to come out and say we're hiking in September or we're going to stay hold. I think what traders really want to understand is his reaction function. What does Warsh actually need to see in the data to move rates one way or another? And right now, the Fed is dealing with an interesting setup, right? I mean, inflation is still running above target, while parts of this labor market and growth picture have pretty much softened. So traders want to know which risk they should be more concerned about. And from a trading perspective, I'd be watching the Treasury market very closely, and particularly the 2-year yields, because it's highly sensitive to expectations around Fed policy. And if you don't trade Treasuries or futures or follow yields directly, you can also watch TLT, which is an ETF that tracks longer duration US Treasury bonds. And just remember that bond prices and yields generally move in opposite directions. There's that inverse correlation there. So if yields move higher, you typically expect TLT to move lower and vice versa. So if Warsh leans hawkish, talking about persistent inflation and keeping another hike firmly on the table, you could see yields move higher. Maybe TLT comes a bit under pressure. Maybe the dollar gets a bit stronger, and potentially some pressure in the equities markets, maybe particularly longer duration and rate sensitive names. And if he focuses more on slowing growth or weakening or weakness in the labor market, you could see the opposite happen. Maybe yields come down, maybe TLT goes higher, and risk assets potentially catch a bid. But Remy, there's also a third outcome that I think a lot of traders discount. Maybe he doesn't give us much at all. And in that scenario, we could get an initial headline-driven move that ultimately gets faded because the market still doesn't have enough information to necessarily materially change its expectations for the Fed's next meeting. So I wouldn't necessarily focus on trying to predict the exact words Warsh uses. Just watch how rates react to those words. And the Treasury market and even some accessible at TLT can give traders a pretty good read on whether Jackson Hole will actually change expectations for the Fed's next move.
Yeah, and Errol, as you mentioned, we've been seeing a lot of volatility across the bond market, in particular yields in the U.S. as well as global Treasury yields. But usually when we're talking about the annual Jackson Hole Symposium, depending on the year, it's usually a snooze fest. But given the fact that, as you mentioned, Warsh hasn't provided any forward guidance, and there's been a lot of volatility in the bond markets as well as uncertainty, give us a sense of the sentiment on the trading floor over in Chicago right now.
Yeah, right now, again, it's the pre-market right now, so we're waiting for market to open. But you can already kind of just feel the energy coming into this room. I think whenever we have such a binary event coming in within the hour of market open, traders are typically kind of on their toes, and I think a lot of guys back here are ready for a lot of the volume and a lot of the action that's to come, especially with Jackson Hole being on a Friday. And again, volatility has been trading at around 15 over the last couple of weeks. It's felt very slow, but from a historical standpoint, that's actually about the average. We just have been pretty spoiled lately. So I think these guys coming in here right now, I think if I had to give the floor rating a 1 out of 10 right now on energy, I'm going to give it a 5.5. Which is pretty high considering the market hasn't opened just yet, but it'll most likely jump to a 9.
Well, a lot to focus on as we head into the rest of the morning. So, Errol, thank you so much for joining us this morning, and thank you so much for giving us your perspective from Chicago.
Thanks, Remy.
Straight ahead, S&P Global's Melissa Otto with a breakdown of yet another earnings blowout from NVIDIA.
Let's get to the big story breakdown. Well, NVIDIA once again shattering expectations, guiding next quarter revenue to $108 billion, the world's most valuable company by market cap, predicting 70% growth next fiscal year. Now, the leading chip maker adding $442 billion to its market value on Thursday in the second largest one-day gain by any stock in history. Now, with shares rallying and nearly flat today in pre-market trade, the company's valuation topping $5.5 trillion. CEO Jensen Huang is putting hundreds of billions of dollars on the line, and this does include supplier commitments, data center guarantees, and of course, anticipation about M&A with potentially Hugging Face. And a new report from the Wall Street Journal playing into concerns surrounding the AI financing rush. The journal saying that the company has hit pause on key deals within its newly launched financial backstop as well as revenue sharing initiative. While joining us on this Friday morning to break down the numbers and separate the real fundamentals from bubble fears is Melissa Otto, head of Visible Alpha Research for S&P Global. Melissa, good morning. Happy Friday. Thank you so much for joining us. So it's been a big season when it comes to earnings, and we finally got results out from NVIDIA. So given the fact that the company is guiding to $108 billion next quarter, with non-hyperscalers accounting for 42% of revenue, tell us if you think this shift away from pure big tech spending will finally silence that AI bubble narrative out there.
Good morning, Remy. It's great to be here. Happy Friday indeed. NVIDIA's quarter was terrific. Their guidance was very solid for next quarter, beating consensus expectations. I think what really surprised the market was that 70% revenue growth number that they gave for next fiscal year. And I think what that is doing is illustrating to the market that demand continues to be extremely high and that there continues to be acceleration in their business. There has been concern that we may be seeing meaningful slowdowns over the next couple of years, but they dispelled all thoughts of that yesterday.
Yeah, and there are so many moving parts here when it comes to the NVIDIA earnings report. The company did commit over $100 billion in loan guarantees as well as data center leases for its own customers. And at the same time, the journal is reporting that NVIDIA has paused signing new financing deals with cloud companies. So do you think analysts are viewing these guarantees, these massive guarantees, as genuine demand or potentially risky circular financing? Can you walk us through this, Melissa?
Yeah, I mean, it makes sense to be a part of the whole ecosystem, given the commitments that they have to grow out data centers and to be a part of what will be the next generation of AI growth and infrastructure. I think in terms of circular financing, the CFO did a fairly good job of dispelling some of the concerns, but I think there's always going to be looming questions out there about such an unusual structure. It's not something that we normally see. So I think it's sort of a to be determined scenario as we go forward. I mean, based on the numbers we've crunched out from Visible Alpha consensus, debt to equity ratios for the hyperscalers and for the space in general tend to be pretty low, with the exception of Oracle. Oracle is continuing to be the levered bet in the space. So I think what that suggests is that there continues to be a lot of capacity for the major companies to continue to invest. And that's good news for NVIDIA's cash flow and good news for the overall ecosystem in general.
Yeah, and Melissa, while I have you here, I do want to get your perspective on some of the deals involving NVIDIA and potential deals, especially because reports do indicate that NVIDIA is nearing a $13 billion acquisition of Hugging Face. And this does come on the heels of deals with Grok as well as Poolside. So what does all of this tell you about NVIDIA's long-term moat beyond just chips?
Strategically, it seems that they really want to go-to anchor in the AI infrastructure space. Hugging Face is strategically a very interesting move for them, and it would be quite complementary to their existing offering and their current business model.
Yeah, and speaking of which, Melissa, I do want to ask you about supply chain, in particular the chip supply chain. So, do you think NVIDIA can keep up when it comes to expansion plans?
I mean, based on their free cash flow and the trajectory of both revenue and earnings for the company, absolutely looks like there should be no problem from a capacity standpoint to continue to invest. This is a company that is very cash generative, that generates very significant both gross margin and operating profit margins, and that is, quite frankly, accelerating into next year.
And Melissa, finally, before I let you go, I do want to get your take on ROI as well as labor when it comes to artificial intelligence. Bill Gates recently warned of massive workplace and workforce upheaval, as well as a lack of transition plans for AI. But Jensen Huang actually pushed back on this, calling AI an unprecedented net job creator. So what is your take on this, especially given Visible Alpha's data on enterprise adoption here?
It's a burning question in the industry at the moment. And I think we see enormous amounts of AI infrastructure CapEx spending between this year and next year. The big four, Amazon, Alphabet, Meta, and Microsoft, are going to spend about $1.5 trillion. And many investors are saying, well, okay, that's exciting, but what are we getting paid? What are the returns to us? And there are big questions about that. We do not see the same magnitude of revenue or profit generation coming from that CapEx yet. It's a bit of build it and they will come. And so I think investors are trying to grapple with, when do they come? What's the catalyst for broad adoption? I think we see that the models are getting smarter, that there's a lot of excitement around new innovations, but that game-changing application, that really big effort within an enterprise to drive that broad adoption in a way that could be game-changing to their business model, we really have not seen anything there yet. But I think to be determined.
Yeah, absolutely, Melissa. Some of these totals, these sums are eye-watering, so you sometimes have to do a double take when you're reading these numbers. We will have to leave it there for today, but as always, thank you so much for joining us, and thank you so much for weighing in on NVIDIA and its latest earnings report.
Thank you.
Coming up next, Brian Corshane updates us on the latest Bitcoin price action.
Welcome back to Market Movers, the opening bell. For the first time since May, Bitcoin has spent time trading above the $80,000 level this week. And in New York morning trade, we are looking at Bitcoin maintaining 79,000, while crypto spiking since Scott Bessent's big toolkit announcement to calm the bond markets, which was followed up by Trump's DeFi industry gathering last week. And we've seen 8 straight days of ETF inflows. Meanwhile, there are a number of headlines floating around that crypto majors' next level of resistance lies around the $83,000 level. Well, joining us on this Friday morning to weigh in is Brian Corshane, founder of Dayton. Brian, good morning and happy Friday. A lot has changed since we last spoke on August 18th, and you told investors not to wait to buy Bitcoin before the breakout. So tell us about your reaction to the recent price action.
Yep. Last Tuesday, I was on your show and I said I was hearing a lot of investors saying that they were going to wait until October to buy Bitcoin. And they were seeing on social media that that's when everybody was saying that the bear market was going to turn to bull market and they wanted to just wait. And I said that was going to be maybe a big mistake because you're going to miss a really good opportunity. And that's essentially what happened. The next day, Bitcoin made a 9% run, ended the week up 23%. And so, yes, it's held steady. A lot of inflows here over the past 8 days with the Bitcoin ETFs. You're not too late. There's just different work to do now.
Yeah, and Brian, while I have you here, we have to zoom out and take a look at the year-to-date performance of the crypto major here, especially given where we were this time last year. But how are traditional advisors out there looking at digital assets right now, in particular Bitcoin and the majors, and what mistakes are you seeing?
Yeah, the problem that a lot of traditional advisors have is that their firm wants them to use pre-made models. These models, they don't have Bitcoin in them because they're optimized to minimize short-term volatility. They don't want their clients coming in and saying, what's going on? Why is my portfolio down? Bitcoin does have volatility. It can move down a lot and it can move up a lot. So it does have volatility. So if you're waiting for your advisor to put you in a model that has Bitcoin in it, it might not happen for a long time. And you're going to end up missing a really good opportunity here. And so when these portfolios, they focus on the short term, they're not so good at big long-term growth. And lastly, when it comes to Bitcoin, because they can't put it in the portfolios, they're not spending a lot of time on it. They're not familiar with the cycles and having the ability to, seize what we have here in price discrepancies and, taking advantage of a big forward outlook on Bitcoin. So yeah, it could be difficult for them.
Yeah, and if we take a look back at the first 8 months of this year, we've seen volatility across all asset classes, Brian. So what is your advice to investors right now? And what should they do after the 20% plus rallies that we've seen when it comes to the crypto major?
Right. So the work that they need to do now, and this is really imperative that they get on it over the next week, is look at Bitcoin's the size of it in your overall portfolio. Do you have enough that, look, if you don't have any, you do need to get some. If you have 4%, do you need to take that up to 8%? I've been a registered investment advisor for 8 years focused on digital assets, and I constantly see people needing help with figuring out what's the appropriate size to have in their portfolio. And for some people, it could be even up to 30%. But what you got to do is right now, it's not too late. Like I said, you just got to do the work and get your portfolio to the right size.
Yeah, Brian, finally, before I let you go, what is your short-term outlook as Bitcoin battles some key resistance levels here? What are the levels that you're looking at? And also, tell us how you feel about exposure to the treasury companies.
Right. So the next resistance level, is 83,000. And then I think there's a big wall right around 90K. If we can get above 90K, I mean, we could be seeing back above, in the near 100 range, 6-figure range by the end of the year pretty easily. We are due for a little bit of a pullback, but it's likely we can move a bit higher before that happens. So I don't advise people waiting for that big pullback to get involved. We're at the start of the bull market. And treasury companies, from Bitcoin treasury companies to hyperliquid treasury companies, you really got to understand that these are going to have a lot more volatility if you can stomach it. You also have, what are they doing in the background? Do they have debt behind them that they have obligations to, fulfill? It can be more complex. If you don't understand these, the best thing to do is be in the pure digital asset.
And less than 60 seconds to go, Brian. So I do want to ask you, you mentioned a bull market. So would you say that the crypto winter is officially over, or is it too soon to call it?
It's not too soon to call it. This move that we had over last week, when you look back in history over Bitcoin's price, when there's a move this large with this much conviction, it tends to hold on, and the forward returns are even better. This is a really good move. We're still in the early stage of it. Again, there might be a pullback that happens, but this is the turn from bear to bull. Look, we still might not be at all-time highs by the end of the year, and some people might get a little bit bored with Bitcoin a little later on, but this is the time to take advantage, make sure your portfolio is the right size, and hold on.
Well, I don't think boring is such a bad thing. So I appreciate your time, Brian. Thank you so much for weighing in. We'll keep an eye on those resistance levels. Have a great weekend.
Have a great weekend. Bye.
Well, ringing the opening bell on this Friday morning here at the New York Stock Exchange is Precidian Investments to celebrate the trading of its ADR hedge products. And in Chicago, the SIBO internal floor operations team is ringing the bell over there. Now here in New York, Precidian is known for creating innovative structures in the ETF as well as mutual fund industries. Its ADR hedge funds are designed to give U.S. investors direct exposure to international companies like Novo Nordisk while embedding a currency hedge to mitigate foreign exchange risk. And other products as well as innovations include active shares, currency shares, and asset-backed digital tokens. Well, as we count down to the opening bell here, take a look at the podium of the New York Stock Exchange. Precidian CEO Dan McCabe will ring the opening bell. Take a look. Well, that was the ringing of the opening bell to kick off trading on the final Friday of August. Now we are looking at the Dow Jones Industrial Average posting a triple-digit gain, higher by a little over a quarter of a percentage point, gaining by about 145 points. As for the NASDAQ Composite Index on this Friday morning, we are looking at that index slightly below the flat line, pulling back just by about 10 points. As for the S&P 500, we are looking at a positive open with the index higher by about 0.1%. As for the NYC Composite Index, which tracks all companies listed here at the New York Stock Exchange, we are also looking at a positive open with the index higher by about 0.3%. As for a look at 10-year Treasury yields, right now we are looking at the 10-year currently hovering above the flat line at 4.68%. As for the 30-year yield on this Friday morning, we are looking at the 30-year yield currently right at the 5.198% level.
Straight ahead, Heartland Digital Asset Exchange founder Heidi Lehman joins us with another overview of blockchain's expansion.
Welcome back to Market Movers, the opening bell. Well, when it comes to crypto adoption, the Midwest does stand out from the major hubs across the nation like San Francisco and New York. The region is leveraging its core economic strengths like agriculture and real estate for tokenization. And at the same time, the region's abundant wind power, nat gas reserves, and hydro resources have turned the Midwest into a prime location for Bitcoin mining. Meanwhile, another key trend is playing out. Midwest private wealth managers and multi-generational family offices are moving into digital assets. While the focus centers on crypto, ETFs, regulated custody frameworks, as well as yield generating institutional protocols rather than high-risk altcoins. Well, joining me live to expand on crypto adoption in the Midwest is Heidi Lehman, founder of HDAX, the Heartland Digital Asset Exchange. Heidi, great to have you back. Thank you so much for joining me.
It's great to be here, Remy.
Well, first and foremost, let's talk about the Midwest and
Absolutely.
also what's changed in the years since you were last year over at HDAX.
Yeah, well, I think the first thing that changed is we had a very successful show last year, so we're back for year two, so that's always exciting. I think, the Midwest is probably following that macro trend in crypto, where last year there was a lot of sizzle and excitement. We had the Genius Act. This year, it's very focused on the institutionalization of the asset class. So the integration of blockchain into banking, energy, and infrastructure is what we're focused on this year at the second Heartland Digital Asset Exchange. And I think energy in particular is a domain for the Midwest. And we're seeing the build out of data centers and nuclear plants and critical materials, and how can tokenization play into that?
Yeah, and as you mentioned, we are paying attention to what's happening when it comes to energy, as well as the intersection of banking, as well as infrastructure. But when it comes to tokenization, break down what the reality looks like.
I mean, I think what you've got right now when you're looking at these big energy projects is a very large capital stack, right? So for a critical materials project or a behind the meter energy project for a data center, you're looking at anywhere from $100 million to $3 billion. And maybe it starts with public finance, right? So I'm involved with a critical materials project right now in Kansas City, and we just got a $160 million grant from the National Science Foundation. Well, that's great, but it's really just catalytic capital. It's really just the beginning of a $3 billion raise. So much of that raise, some of it's equity, but a lot of it is project finance, and that would be used to take something, from the lab and expand it to a factory where you might produce cathodes or something like that. So you need, a good amount of capital, and project finance, which backs it, it's a highly illiquid structure. And so that means the hold period is a long time for investors, and investors don't like to hold for a long period of time. So tokenization really enables a few different things. So one is capital formation with more ease. So you can expand who you're raising capital from, and fractionalization, so you can kind of expand that pool. Settlements, so you've got more efficient settlement, more efficient verification, and then with the right distribution, more liquidity. And that's really where the magic happens, because then there's a secondary market. Investors can get their capital back more quickly, or even take that and then invest in another asset within the same liquidity pool. So for family offices, which is who we're targeting in the Midwest, that they understand this energy business, they understand project finance, they want to help with the onshoring of critical materials, but they also want their capital back, and I think tokenization is a possibility. So they're all ears.
Yeah, and I think you hit on a lot of key points here, especially when it comes to what's happening with financing, with the projects, as well as the involvement of family offices here. So what do you expect to see in the next upcoming quarters, and why does it matter for the region?
I mean, I think that energy demand is not slowing down, right? So we're a big need for compute, for AI, competition with China, however you're going to back into it. And right now, I think energy demand it's 4% is going to data centers right now. So maybe not as much as people think, but it's projected to be 13 to 15% by 2030. And so that is going to mean that we need rapid capitalization. So it's hyperscale, but as you probably know, with a lot of the hyperscalers now, the grid is in gridlock. So there's just not enough, it's a very slow queue. It can be 3 to 7 years to bring energy onto the grid. And it's also expensive. And there's been some backlash, right? Like in New York has decided, and a lot of other states, no data centers because the perception is they're noisy, and they also raise the rate base for consumers because of all the demand for energy. So a big trend now, and in fact I think this may be legislation at some point, is behind the meter energy. So kind of bring your own energy to the equation, whether that's nuclear or renewable, incredibly expensive. Again, with tokenization, there is the opportunity to finance this in a fractionalized cross-border manner, more efficiently, right? With settlement, verify it, and then offer liquidity. So I think tokenization can be a game changer for speed, and then opening up who can finance these projects that are just going to make them go a lot faster.
Yeah, and Heidi, before I let you go, I understand that the HDAC Summit is taking place in Kansas City next month. So I am sure that you are devoting a lot of energy to this upcoming event. So what headlines should we be watching out for?
I mean, I think the headlines are we've got some amazing keynotes that are coming in from all over the globe to speak, which is amazing. So Brad Garlinghouse, who's the CEO of Ripple, going to be focusing on cross-border payments, is going to be interviewed by Esther George. She was with us last year, so 20-year KC Fed president, a lot of policies set at the KC Fed, so it's kind of old banking, new banking, so that could be a little spicy. Michael Sonnenfeld, CEO of Tiger 21. So he's going to be talking about family offices and how they're thinking about digital assets. He's also an energy investor through MIT in both nuclear and data centers at sea, if you can believe it. And then Coinbase, so Anthony Basile, second year back with us at Heartland Digital Asset Exchange. And he really brings the institutional credibility to the show, and a lot of other funds as well. Multicoin, Blockchain, Starframe Capital. So we're set to have a fantastic gathering in the Midwest.
Yeah, and before I let you go, we have a little over 60 seconds here. So as we head into the rest of this year, there's a lot of anticipation about the regulatory landscape, and I'm sure you've been having conversations with many stakeholders out there. So what is the reality?
So if you're talking about the Clarity Act, I think in particular, look, the 15th I think is when we're up for possibly a decision. Now, nothing ever happens on time in our industry, but that happens to be the day of our event. So I think there'll be a lot of discussion around it, both from the banking side of it. So we have Lead Bank, which is blockchain as a service. They happen to be based right in Kansas City, some stablecoin companies, and then energy. So I think we're all going to be looking at that regulatory clarity, because it does make investment of all kinds, whether it's your personal portfolio or tokenization of a large energy project, just a little bit more clear. So if that regulation moves through, I think that's a wide open lane. But if not, I feel like there's going to be other ways that the path is cleared, like a little bit at a time, to make the bets that we want to in a growing space.
Well, Heidi, today we are awaiting Fed Chair Warsh's comments coming out from Jackson Hole, Wyoming, but I'm sure on the 15th we will be paying attention to Kansas City. So thank you so much for joining us today.
Thank you, Remy. It's so great to be back.
Thank you so much.
Coming up today on Market Movers Midday, Agentic AI and UBS Private Wealth Management's Brad Bernstein with a key macro overview.
And yesterday, we were able to take this beyond a proof of concept. Last night, we submitted the first QSB transaction on Bitcoin mainnet, and I'm very excited to announce that as of, I think, 5 hours ago, that transaction has been mined by Mara Slipstream and is live on Bitcoin mainnet. This is a monumental moment. Right? This is the first post-quantum resistant Bitcoin transaction on Bitcoin mainnet today. It required no soft forks. It required no hard forks. It required no core protocol upgrades. And it's live today. And so just to really paint the picture of what this means for all of you here and what this means for us and what this means for your businesses, right? We've built essentially a parachute, right? As we're flying through this quantum storm, we have a parachute in the airplane. Or as we're facing the threat of the impending quantum nuclear war, we have a doomsday bunker. That's what this product is. What this product is not, it is not a cure for quantum. This product is still opt-in. Coins that have lost their private keys or coins that are lost from circulation, those coins cannot be moved into an address with QSB enabled.
With only a few weeks of summer left, a new season is here, and that is pumpkin spice latte season. Now, Starbucks' famous beverage is officially back and includes a few fun new twists. Returning this year is the classic pumpkin spice latte, pumpkin cream cold brew, and iced pumpkin cream chai. And new versions of the drink include the iced pumpkin cream shaken espresso. Now, this is a blonde espresso shaken with brown sugar syrup and cinnamon, as well as oat milk, and topped with pumpkin cream cold foam. Also making their debuts, iced pumpkin cream matcha and pumpkin spice chai. Now, 2 banana-inspired drinks have also made the lineup, the iced banana bread latte and chai. And pecan and cider versions are also back, but iced cider is new. And this is a combo of Starbucks chai and strawberry acai flavors that are designed to mimic a crisp cider. Now, new food options include the chicken bacon protein pocket and the new hedgehog cake pop. While the pumpkin cream cheese muffin also returns, the coffee giant has teamed up with Martha Stewart for a campaign that's focused on celebrating autumn traditions. The company also introduced the PSL Society collection, which features limited edition seasonal drinkware and also merchandise tailored for dedicated PSL fans. Now, the pumpkin spice latte generates an estimated $500 million per year in direct sales for Starbucks. And since its debut 23 years ago, the drink line has pulled in over $2 billion to $3 billion in lifetime revenue. And Americans spend upwards of $800 million annually on pumpkin spice products overall. And this includes coffee, baked goods, snacks, candles, and air fresheners, with coffee and beverages accounting for about 39% of that total market spend. But it's possible numbers this year could be lighter than usual, and that's because a data analyst from Google says PSL searches have plunged this year, which is surprising, with only 6% of the country Googling the drink. And that is down from 64% searches last year. Now, matcha latte stealing the spotlight with over 260% more searches than PSL. And on Pinterest, PSL posts are being replaced for posts of banana lattes, which are up over 900%. And that lack of interest extends even to the Golden Arches. McDonald's isn't offering the PSL this year, ending the seasonal tradition after 13 years. Now, Mickey D's is instead looking to bring innovation to its fall beverage lineup and subbing out PSL for its caramel apple pie coffee lineup. Now, the new drinks include caramel apple pie frappe, as well as hot caramel apple pie latte, iced caramel apple pie latte, and the caramel apple pie iced coffee. Now, these are available now at participating restaurants for a limited time, and they bring together coffee with apple and caramel flavors. They're also topped with crumbled apple pie pieces and salted caramel flavored whipped cream. McDonald's has been investing in drinks as a potential growth strategy, and this move is part of a multi-year campaign to expand in the beverage space. Now, other new drinks include a lineup of Red Bull Dragonberry Energizers. The bottom line, well, restaurant chains are prepping for a big beverage fall. We'll just have to wait until Q3 earnings season to see whether it's the pumpkin spice latte, the caramel apple pie coffee, or something else entirely that wins out. Well, I'm definitely ready to try some of these beverages out this weekend.
Still to come, Exola President Chris Hewish with a breakdown on the intersection of Web3 and gaming.
Well, nearly 30 minutes into today's trading session, and we are looking at the major stock averages holding on to session gains. Right now, the Dow Jones Industrial Average is up a little over 100 points, gaining by about 0.2%. As for the Nasdaq Composite Index and the S&P 500, we're looking at an advance of a little over 0.1% for both of the indexes. As for the NYSE Composite Index, which tracks all companies listed here at the New York Stock Exchange, we are seeing a gain of a little over 65 points, higher by about 1/4 percentage point. Now, take a quick look at market moving names this morning. Marvell Technology beat revenue expectations and raised its guidance today, but shares are still dropping this morning. Now, it is the latest sign that Wall Street's AI expectations may just be too high to clear. And this expectation, as well as disappointment, has dragged down other AI-linked tech names as well, including Intel, SanDisk, and Lumentum. Meanwhile, PayPal is taking a beating this morning. Shares have tumbled over 10% in pre-market trade, and right now we are looking at PayPal down a little over 11%. And this does follow reports that Stripe and Advent International have dropped their massive buyout bid for the fintech pioneer. And it is a different story for Gap. We are looking at shares of the apparel maker surging 18% after the company tapped a retail veteran to help revive slumping sales at its biggest brand, Old Navy. And of course, all eyes are on Fed Reserve Chair Kevin Warsh, who's set to speak at the Jackson Hole Economic Policy Symposium this morning in just a few moments from now. Plenty of anticipation as global inflation signals are flashing and as bond yields remain elevated. And what Kevin Warsh says could either reassure nervous investors out there, or there is also a possibility that we see long-term borrowing costs move on his commentary. And that does wrap it up for Market Movers, the opening bell. Thank you so much for watching. Have a great day, and we'll be back at noon.